Right. We have another exciting episode of Multifamily Deals and Dollars, and I am joined with Kiran Carr, of course. Good morning, Kiran. Great to see you.
Good morning. Yes, great to see you. It's the springtime and beautiful time of the year. So,
Yes, beautiful time, and we love it. It's the lots of real estate transactions seem to happen this time of year, and it keeps everybody busy and on their toes because you got to move fast. But make sure you explore your options when you're looking at these deals. And in terms of options, today, Kieran, you and I were going to discuss private lending and borrowing and how that looks in the real estate world.
yes, I agree. So, there's a famous quote, like our quote says, right? There are two kind of people who have ran out of their money, and who will be the second kind of people who will be running out of their money. So there is like when we talk about real estate, we need there are two parts. So one is the mortgage amount, and the second is a down payment, right? So if the down payment is coming from your own funds, and you are saving from your job, and you're saving the money, you're after doing some transactions, you are gonna run out of your own capital. So doesn't mean that we need to stop doing the transaction just because we don't have the capital available. So the other options could be like the seller, right? Like the vendor take back, and that's also the down payment can come from that, and also the money partners. The funds and the down payment can come from the money partners, and you have really great deal in real estate, and you don't want to pass on, and it's a great mortgage sounds great, and you have an exit strategy. So you what would you you bring your money partner who has the capital, and you do the transaction. Yeah.
Yeah, and Kieran, that's a great way to start off because a lot of people hear about real estate investing. They want to get started in real estate investing. To say, I don't have any money. Well, all you need is the skill set and the mindset, find the deals, and you need to find a money partner, a qualifying partner. So a money partner is somebody that has money for the down payment, renovation costs, and any legal fees that are incurred as well, in terms of obtaining the mortgage. And a qualifying partner, which often is also the financing partner, financial partner, is a qualifying partner. They have strong income or strong net worth, and they are able to get the mortgage for you to acquire that property. So sometimes you need
Yes.
a couple of people to help you out. That might be all balled up into one, and you guys can joint venture on a program. That's a great way to start off.
Yes, I agree. And then like as a residential deal, your own financing power, like the qualifying power is going to play out. But if it's like commercial deal, you need a net worth. 25% of the purchase price, you need a net worth, because it's end of the day, it's a bank. They need a security, and they can see that at least if something goes wrong, we have people who have assets, and we can go after, or the worst case scenario. So
Yeah, and another common thing that's you hear a lot about are private mortgages, and private mortgages have a little cloud of negativity around them from the general public. I think it's like, ooh, he's got bad credit, or he can't afford something, so he has to go get a private mortgage, and that's not necessarily the case. There's a lot of great benefits to getting a private mortgage. One, it's speed. You can get a private mortgage a lot faster than you can get a mortgage from one of the top five or the top six banks in Canada. So, and sometimes without as much scrutiny as well. And some things that people just don't want, some things on their credit bureau. They don't want a mortgage because they've got other things that they have going on in life, and the mortgage on that is going to restrict them in their personal endeavors that are outside of the real estate world. So private mortgages are a great opportunity.
right, and then somebody needs to start from somewhere, right? Like it's the education that's the most important thing. The deal that needs to be strong enough that there should be clear exit. For example, if you're doing land development, like have you checked all the check boxes that it's a great deal? How do you have, if you're going with the private lender, if you're going with the B lender today, does the mortgage broker, you have, they are okay with taking you to the A lender? What are those options? So having a clear strategy involving your mortgage broker upfront, that this is a property, this is a lending I'm looking at, a private lending. And sometimes those banks see as a, they look at your how much risk they have. They're not okay with lending right now because the numbers doesn't make any sense. But if you do something to the property and increase the NOI of the property, and then there is an exit for, taking from B lender or, private lender to the A lender. So I think this really, really, really important that educate yourself so that you can differentiate from a bad deal and a good deal. And the second thing is having a really experienced mortgage broker who can educate you, who can help you out with the right mortgage product. And it's all about, I think, Jim, what's happening is, when we have our own belief system and we have limited knowledge, the decisions are based on those. People are making their decisions on their beliefs and the limited knowledge. And no capital, I don't have a capital, I cannot do the real estate transaction. I have to make money from my active job, right? So trust me, I am a nurse and I know how hard it is to save down payment money. And those like 20% down payment on a rental property, it's hard. Like I won't be able to do the transactions, like without my partners and without using somebody else's capital. And other thing I want to mention, it's not only the people, like some of them mark banks also have a line of credits and the balance transfer products and like loans, renovation loans, like all those loans that help out with the transaction. So also many products available. We just need the right deal, yeah, and exit.
The right deal. Now, you said a lot of great things there. And one thing that Kieran pointed out there is that she's a nurse. So Kieran, I want to thank you for serving the community and being there for us. Capacity. Thank you so much. The other thing that Kieran you mentioned were B lenders. So for those that don't know what a B lenders are kind of like alternative lenders. So they're alternative to the Class A lender banks. Okay, those are the big banks that know of them out there in Canada. That's TD Bank, CIBC, Bank of Montreal, Bank of Nova Scotia or Scotiabank, and RBC, Royal Bank of Canada. Those are also familiar names in America as well, because a lot of the Canadian banks have jumped over the border there as well. And Wells Fargo, all the big names in the Bank of America, all the names over there that do the mortgages. Now, B lenders in Canada, you might have heard of some of these names. There's Equitable Bank, there's Home Trust Company, there's Street Capital, and I think they're now referred to as RFA Bank of Canada. There's Merrick's and there's MCAP. And over in the States, I believe you have Carrington Mortgage Services, Angel Oak, Citadel, JMAC or JMAC, and Athos Capital. So those are some examples of B lenders. And another key point that you brought up, Kieran, was that you need a mortgage professional. So we were talking about private mortgages and private borrowing, private lending. The goal, of course, use that private mortgage to your advantage in the beginning. Yes, higher interest rate. Yes, some upfront fees, but that gets you in the game quicker. And then the goal is to get that property in such a situation that you can go to one of the B lenders or the A lenders, and you can chip away at that interest rate and increase your cash flow or your ROI.
Right, I agree. And same with the like registered funds, right? Like sitting in Olympia, and there's another other than Olympia, there's a Canadian.
Western.
Sorry.
Western Financial.
Yes, yeah, Canadian Western, right? So, so you can people can lend. So RRSP, RESP, or LIRA, those if they're sitting in Olympia account. So all you have to do is talk to your bank and say that I want to direct it to self-directed, and you can lend out that capital too. You're getting the interest on that amount, and when you have a same thing is you can't lend with the with your blood relatives, but you can, as long as the deal is great, you can lend out to your partners who are not related to you by blood.
This was a huge eye opener to Irismar and I, working in the bank for so many years, over decades. And just to find out that we could do so much more with our registered savings plans. So what Kiran mentioned there was two financial institutions called Olympia Trust and Canadian Western or something like that. Now those are institutions. So, here we had our funds in our main Class A bank, one of the major banks here. We were invested in, in the past mutual funds, then we moved on to stocks and ETFs. And you're trading and you're doing some of your trading there. That's called a self-directed account when you're doing your own trades and you're buying your own funds and ETFs and stocks. Now there's these other institutions that we just listed off there that you can transfer your money in cash to these institutions. So it's not coming out of your RSP, it's still staying in a registered account. But now you can actually, within these institutions, you can now lend your RSP money out to do transactions in real estate and have some really significant returns as well. I mean, pay attention to the risk. There's definitely risk out there. Everything, every type of investment all carries a risk. So pay attention to that. But there's really some opportunities out there. If you want to learn more, you can certainly reach out to Kiran and I anytime and learn more. I've been using it for many years.
Nice, that's great. And other thing is, like, when I was going to the bank, they will talk to me about how what kind of person I am, like how much risk can I take when I'm opening my RESP or like those accounts. And because what the bank is doing, they're investing your capital into these mutual funds or in the market and the stocks, and then they are giving you return. And there is an administrator fee because the bank needs to pay its employees, right? Whoever is doing their work, it's like more computerized, but somebody doing the work, they need to pay that person. And I don't know, I'm not saying I'm against the banks, but I don't know all those hidden costs. Like, for example, I invested my 100K and then they're in the market, they become 120K. How much was the that middle person, that fee, how much was the charge? If it's 18,000 from that 20,000 I made, that's a lot of money, right? So I did not know, I did not understand, like, I don't know much about stocks and anything, but what I do know is real estate. So what I did, I took my money out from those banks, and I put in the Olympia, and now I'm investing in real estate. I know the deal. I know what the investor is going to do to the property, how they're going to get me the money back, and I know every single dollar where it's going to, be spent. I feel more comfortable investing my registered funds in real estate. So if and now I have being like investing in commercial real estate, I know it's not going to go up and down. It will always be, up, because it's based on NOI. With stocks, and it can go up and down, and mutual funds is like technically, investing in stocks. So I feel more comfortable doing in real estate compared to when the market is going up and down, which is not under my control, right? So I being a healthcare professional, I feel more comfortable, like when I know everything about my patient, and like, I can do something to it. But when I don't have any control, and I feel anxious, like, that it's my money and I don't have a control over, COVID happens and like something else happens, like another country fought with another country, that is not under my control, right? So what can I do so that my money doesn't go down?
Yeah, absolutely. When you're investing in real estate, and whether it's through your registered funds or your cash non-registered funds, you know, make sure you have a real estate investor focused lawyer, and you want these people looking over the contracts that you're signing just to make sure it's just a little layer of protection for you. It's a big layer of protection for you. So just make sure you've got the right team, the right people. Again, I'm sure Kieran and I can give you loads of examples for you to reach out and do your own research on that. But analyze the deals and be careful. Not everything is as perfect as it sounds, but with you minimizing your risk, you could fare quite well in real estate investing with private lending.
Right. So
Some other types of private lending that where it comes in great, the types of borrowing is when you need some in America, I believe they call it gap funding. Here we often call it bridge loans. And these are temporary short-term loans to get you as a kind of gap funding and bridge loans, the words are right there. It creates a bridge to get you to one point to the other so they're usually a short-term loan just to fill in the gap of time that's necessary in order to lock down a deal or to get extra funding to do the renovations or something like that.
right, right. So we bought a land and we did 50% loan to value with the B lender, and the interest rates are a little higher, like 10%. But we know we are taking that loan, 50%, of that land to construction loan, and then from the construction loan, we'll be taking to the CMHC. So all those things, just not having the capital should not stop you from doing the transaction. There are so many options available in the market.
Right. And when you're lending to a borrower, there's a lot of things to look at as well. You want to look at the borrower's credit worthiness, the viability of that real estate project, and the property's market value are some of the things that you might want to look into. Now, sometimes the borrower is brand new. I mean, it's tough. It's tough to really, sometimes, you want to help somebody out and you want to invest with your heart, but you really need to look at some of the ways that you can mitigate your risks in terms of lending out. Uh, yeah, it's things like that that help you analyze and feel more confident about the deals that when you're lending, if you're the lender.
Yes, so like you have a note, and that can be secured against the property, and you can also look at the deal itself and their exit strategies and the numbers, and make sure you know everything about the investor, what like for their properties, and what's their experience have been with exiting from those lending options. Yeah.
Yes, I know, and I'm sorry for those watching. I think we will take it just a step back because the different type of lending options as well that arise in real estate are often first position mortgage, a second position mortgage. Sometimes there's a third position mortgage if there's still room on the property for that. And then there are P notes, promissory notes. That's really, you know, they usually increase in the rate of return as they get more risky. So of course, first position, borrower is in the first, or sorry, the lender is in the first position to get their money back. Second position, third position, and then P notes, then the promissory note.
And the interest rate goes up. So banks, they're getting like 6%. They're on the first position. They have less risk. 6% interest rate, 7 and 8%, right? Second position, like I said, like 10 or 11%. Third position, higher interest rate, and promissory note, they're even like more higher interest. So more the risk, higher the interest rates.
More risk. Absolutely. So just be careful and make sure that you can handle that. You can stomach that risk that's going to come away with it. Now, but first mortgages, the lender can be in a first position on a mortgage. That usually requires a hefty down payment. Maybe it's a pool of funds that do that. But again, a lot of real estate investment focused mortgage brokers have access to these types of deals as well. And again, I know Kiran and I know many of those in our circle over the years as well. So it's just great opportunities for people that have some cash, whether it be non-registered or RSPs registered, and that you can make some better returns on your money and get involved in something that's going on in your community or your city or your province or state. And you're contributing to a lot of the housing problems that we're dealing with, and you're supporting small businesses. A lot of these guys are small businesses starting up, so it's a really feel good situation.
Right. And one day at a time, right? One step at a time, one property at a time. And just like one sometimes just like one webinar, and one podcast, you're listening to some people, and then light bulbs in your brain are turning on, like and so many things we can learn and take action in our life.
Yes, and just you keep going forward. I mean, you learn as you go along. You don't want to throw all your eggs in one basket, so to say, until you become extremely confident and educated on what you're getting into. But a lot of the time, I mean, I often hear the minimum entry for lenders is around 25 to 50, 25,000. I hear quite often. I think that's safe. $25,000 to each lender, or each borrower, I apologize. But they can go up to $100,000 minimums as well. Sometimes those are for registered funds.
मैं खा ली है.
And so, yeah, it's a great opportunity for you to use money that might not be doing as well for you, sitting around in some savings accounts and some stocks, as you've seen over the past couple of years, how your mutual funds and your stocks can tank. I used to be quite a heavy stock trader and ETFs, and most of my portfolio now is in real estate. I still hold some stocks.
Okay, perfect. That's great. Like, so much. Like people when they don't know, they don't invest. Like I don't know stocks. It's just not my cup of tea. So I don't want to say it will never be, but I just don't know enough. Yeah.
Well, that's wonderful. Guys, if you have any more questions about this, private lending, private borrowing, uh, private financing, how it all works, please don't hesitate. Feel free to reach out to Kiran or myself anytime, and we'd be happy to guide you as best as we can.
Yes, yes, and in real estate is a team, right? Let's get together and do more transactions, and whether it's finding a property, underwriting it, and bringing out the capital, we can all work together. So more than happy to help you guys, and happy investing. Thank you so much.
Yes, and private lending is passive investing, and it's a great way for you, if you're too scared to get into real estate investing, it's a great way for you to start, get your toes a little wet, and learn about the industry a little bit and go along for the journey with somebody that has some experience. So hope you feel inspired and hope to see you investing soon. Thank you, everyone.
Thank you.
A wonderful